The 30-day CGT reporting. We know we need to do it, but how on earth do we do it? Well, this video is a step-by-step guide of how you can then report your capital gains tax liability to HMRC within 30 days of your disposal. Go check it out. So now we're talking about capital gains tax, making a disposal, or then having to report that to HMRC within 30 days. This is a new requirement from the 6th of April 2020. So there is a link below this video description with this particular link about capital gains tax. And it's worth you reading through this. Basically, there are a couple of things you need to be aware of. First of all, have you made a gain? Well, you've made a gain. Let's say you sold a property for £100,000 and you bought it for £90,000. Technically speaking, that's a gain of £10,000. But, well, that's below your annual CGT exemption. Especially if you've got a husband, wife, civil partners involved, and then you get £24,600 capital gains tax exemptions. So you may not have made a gain at all. So make sure that you understand whether or not you need to submit a CGT report. Indeed, you may have losses to carry forward from previous years that offset the gain that you have. So be very careful before you submit a tax return using the 30-day CGT reporting, because you may pay to HMRC tax that, quite frankly, you didn't need to pay. So be very, very careful before making disposal and reporting that to HMRC. But feel free to have a read of this. There's a lot of information here about what you need to do, what you have to go forwards with, etc., etc. Once you do that, you will click on this link. There is a particular link here. If you sold the property after the 6th of April 2020, well, clearly we are after that date. So you need to click on this link. Again, I will provide you with details below this video just to make your life a little easier because, well, HMRC haven't. And then once you go into that, you've got report and pay capital gains tax on a property. Again, more information that's really required. You get basically a start button, click on that, and then it will take you into the new tab, which is here. So what we're going to do is talk about who were you completing the return for. We're going to say yourself. By the way, when you go, before you get to the screen, you need to get a different code. You need a capital gains tax identifier. So if you're a husband, wife, civil partner, you each have to get one of these. Now you may say, well, I've already got a self-assessment UTR and username government ID. Surely that's enough. No, HMRC wants to make it extra difficult for you to use, which is crazy. I appreciate, but we are in the UK. We do like to make things really hard for ourselves when it comes to reporting. And I bet that's really a frustration on Rishi Sunak when he looks at the HMRC department. So who are we completing the return for? Yes, yourself. Click on continue. How many properties are you disposed? So you could use this same return for more than one property. We're going to say one just to make life a lot easier for us. And then we're going to press on continue. How did you sell the dispose of the UK property? Just say sold it. Now, interesting enough, this could be very interesting because sometimes you may have given your asset, you may have gifted a property, which you still need to pay capital gains tax. So do be very careful when you're giving away property that you still have to report giving it away here for CGT purposes. I'm really not sure what other there's no useful information here, is there? You already sold it, gave it away. What other thing could you have done? It just says other, and I have no idea why they would put that there. Check if you can use the service. Were you a UK resident on disposal? We're going to say yes, just to make it easier. If no, then you've still got to do a different return. Press on continue. Did you sell, dispose of UK residential property? Now, interesting. This is pertinent because it's now going to help you to understand the capital gains tax calculations. If you are a basic rate taxpayer, you will pay 10% if you're selling shares, as an example, or 18% if you're selling residential property. As a high rate taxpayer and an additional rate taxpayer, you pay 20% capital gains tax if you're selling shares or other type of assets, but 28% capital gains tax if you are selling residential property. So we're going to say yes to that and click onto that. You'll enter some details there in terms of the date, so we're going to go ahead now and just put in there. In fact, I can't do that. I'm going to just put the 10th and 20. And what was completion date when you sold or disposed of the property? So again, we're just going to make life easier. And please note that you have to do the reporting for CGT purposes on the actual disposal. And that's on the completion, not the exchange. So check all the details right, and then scroll to the bottom, confirm and continue. Now what we need to do is go through the section which says completed. We haven't got any other information yet. So it gives us a nice status now in terms of what we've done. Enter the property. So here I'm going to just enter the information, and I'm going to do find the address and then continue. You need to do the same for your property. Okay, so now you've entered and checked the property details. We're now moving over to the sale disposal details. How much of the property did you own? You've got 100%, 50% or other share. Clearly, if you've got a third of the share, you would need to click on that and then type in 33. But we're going to just enter 100% here and then press save, continue. How much did you sell the property for? So in this regard, we're going to sell it for £200,000. This is additional cost. So interesting enough, this is the capital cost that you would have had on, selling the property. So things like legal fees, estate agency fees, things like that will come into that. So we're just going to put £1,000 into there. And now we just need to check those details and press confirm, continue. Okay, now we're on to the purchase or acquisition details. So let's click onto that. How did you get the property? Again, as we said before, you may have been gifted the property. We're just going to say bought it for now. When did you get the property? We're going to say we bought it 2 years ago. So let's just put in 2018. And how much did you pay for the property? We want a good size gain so we can understand what's going on here. So we're going to say £175,000. So we made a £25,000 gain. Did you want to include any improvement costs? Now, if you're a buy-to-let property investor, you may have already claimed the cost against your income. So you can't have two bites of the cherry, as they say. You can only have the costs that were not allowed. So an example, it may be an extension of the property, or if you create an extra bedroom and bathroom, then those are additional suites and rooms. Those would have been capital in nature. We're going to say no, just to make life a little easier for us today. Do you want to claim any additional capital costs? Then I'm going to again put in no, but please note it does say for surveyors, solicitors. This is typically used for the purchase of your property. You may have already put that into the previous box. We're going to assume that the legal fees and the stamp duty and land tax was put in the previous £175,000. Okay, so now it's asked me to check my answers, click on continue, and away we go. So we're going to enter reliefs. This is typically used if you have lived in the property. We're going to say no to that. For this example, let's make it really easy. But if you have had the property that's been rented out whilst you have lived in it yourself, or indeed you lived in the property, then moved out and subsequently rented it out, you will get something called private residency relief. We're going to assume that we have not ever lived in the property, and we'll continue. Okay, do you want to claim any other reliefs? Now, do make sure that you speak to your property tax specialist to understand what reliefs you should have. Here, I would say to you, we have got a capital gains tax calculator. Again, I will put that at the front of this video into the link for you to look at that capital gains tax calculator to make sure that you understand what reliefs you can get. There isn't much information from here. You can click onto this other reliefs, but it's not easy to understand. I've created a spreadsheet which gives you all the reliefs within that calculator. This does not do it for you. But for this example, we're going to say no and continue. Here we are now going to confirm our details. Again, confirm and continue. Now we're going to report and pay the taxes. So this is the losses. As we said before, if you have losses in previous tax returns that you want to bring forward to offset against this gain, then you can do so. If that loss is in excess of the gain you have made, then you do not need to fill in this form at all. Stop right now. However, we could put some losses against it. I'm not going to do so. And we're going to say no, no, no. Just get past all of this. And then we've got this capital gains tax annual exemption. So in this regard, I'm going to put in my total exemption, save and continue, and away I go. I can then check my details. Okay, do I want any capital gains losses? No. Have I got any in previous years? No. Do I want to use my CGT annual allowance? The word yes. I'm going to continue. Okay, so now we're on to the next bit. Enter the capital gains tax for this year. So I'm going to click on match right now. What did you expect your taxable income? Now, please note, if you are a basic rate taxpayer earning less than £50,000, you will pay between 10% and 18% capital gains tax. Again, as we mentioned earlier, 10% on shares, 18% on property. But your capital gain could move you up. So what I'm going to put in here is £45,000. And the reason for that is because I want to show you the step change from being a basic rate taxpayer to a high rate taxpayer, not because of my employment income, as this example will show, but more to do with the capital gain. My capital gain might push me over and above the £50,000, and therefore I might have to pay the higher band of CGT. Okay, so I'm going to put in 0 for this. This is just what is your personal allowance for the year, so 2021. So we're going to just put in 12,500 because that's your standard. You may put 0 on that, or your personal allowance may be lowered because you earn more than £100,000. But I'm just going to keep it quite box standard. Have any of these amounts been estimated? Now, typically I would say to you, make sure you get your completion statements, both on the purchase and on the disposal. Please do not make any estimates. You can mitigate that problem if you have to do this, by the way, to put in estimates, because you'll have to do a final number on your personal self-assessment tax return. Please do note, though, that if you have not got your completion statement on the purchase now, you're going to need to get that for your self-assessment tax return. So you may as well get it now when you're doing this report. So here we're going to say no, there's no estimates. I'll press continue. Okay, so this is now saying, tell us how much capital gains tax is due on this return. How we calculate the tax. So you'll notice there £24,000 is the gain, which is the £100,000 less the £75,000, which is the purchase price, less the £1,000 fees that I had. So £24,000. Now, interesting enough, it's got taxable gain of £11,700. Which is the difference between my annual capital gains tax exemption of £12,300, which it says here 2776 is my tax. I'm going to click on the see workings, and you'll notice here that it's starting to give me all the workings of my capital gains tax liability. Please note that I've got a basic rate tax band of 18%, but I've also got a high rate tax band of 28%. And that's really important to note because you could be moved from being a basic rate taxpayer right up to a high rate taxpayer because of the gain. It's added onto all your other taxable earnings. And then when you're happy to do that, what you basically say is, yes, I know that there is a 2776 capital gains tax. Yours will be different. Once you do that, press that and save and continue. Check your answers. Now we're going to say, yes, okay, I've got to pay this tax. Confirm and continue. Now you're going to go through all the details about what you need to submit, and then you say, okay, upload supporting evidence. This is typically, we're going to say no because I don't want to do this, but you could upload your completion statements on the purchase and the sale, and if you have any capital purchases, you could upload those. But notice that it says only 2 documents uploaded. So what you might want to do is get your completion statement all on one document, put it through a scanner so it's on one PDF. Do the same for your capital expenditure as well, so that everything is all on one document. We're going to say no for this. And check your answers. Yes, I'm fine to not upload information. Okay, so I'm at the point now of declaration. Once I've done that, I can then do accept and send. I'm not going to do that clearly, but what you will then do is enter your bank details to make the capital gains tax payment. And that, ladies and gentlemen, is how you do a CGT report for HMRC within 30 days of disposing of the asset. Until next time, my name is Simon Mishevich from Optimize Accountants. Thank you for watching.